Budget 2026. 30% tax on trust distributions from 2028. Is that double tax? This is a genuinely important question, and the honest answer is that the precise mechanics of how the new 30% trust tax interacts with beneficiary taxation haven't been fully detailed in the budget announcements yet. Here's what we know and what remains unclear. What's been announced from the 1st of July 2028, discretionary trusts will be taxed at 30%, paid by the trustee. The intent is clearly to stop income being streamed to low tax rate beneficiaries to minimize the overall tax bill. The double taxation question under current trust law: when a beneficiary receives a distribution, they include it in their assessable income and pay tax at their marginal rate. If the new 30% is simply layered on top of that existing treatment, you could end up with tax paid twice on the same dollar, once by the trustee at 30% and again by the beneficiary at their marginal rate. That would be genuinely punitive and goes well beyond what the government has signalled as its policy intent. What's most likely, the government will almost certainly design the legislation so that the 30% tax paid by the trustee is either a final tax, meaning beneficiaries don't include the distribution in their own assessable income, similar to how company dividends work before franking credits, or a withholding style tax where beneficiaries receive a credit for the 30% already paid, much like a franking credit system. The problem right now, the legislation hasn't been drafted yet. This is an announced policy, not yet law, and the technical detail that answers your question will only become clear when exposure draft legislation is released, likely later in 2026. This is exactly the conversation to have with your accountant or tax advisor now, so you're ready to act the moment the draft legislation drops. If double taxation is the outcome, the structural calculus around discretionary trust changes dramatically.